coin that's down 77% from its all-time high, 8 months inside a descending channel, volume drying up to historic lows, and right now, at this exact moment, the price is sitting directly on trendline resistance. What happens in the next few days on Mantle could define the next 6 months of this chart. Let's break it down. This video is for educational and entertainment purposes only. Nothing here is financial advice. Always do your own research before investing. For anyone not familiar, Mantle is an Ethereum Layer 2 network built on a modular architecture. The idea is to separate the execution, data availability, and settlement layers to achieve better performance and lower costs than traditional monolithic chains. What sets Mantle apart from the crowded L2 space isn't just the technology, it's the treasury. Mantle holds one of the largest protocol-owned treasuries in all of crypto, north of $4 billion. That's not a trivial number. It gives the project runway, credibility, and the ability to execute partnerships and incentive programs that smaller projects simply can't afford. It currently sits at rank number 42 by market cap. So this isn't a micro cap gamble. It's a mid to large cap asset with real infrastructure and real money behind it. Whether the market is pricing that correctly right now is exactly what we're going to find out. Let's get into the chart, and I want to walk through this honestly, because the technical picture is genuinely at an inflection point. Mantle hit an all-time high of around $2.90 in October 2025. Since then, it has been in a descending channel for over 8 months, a series of lower highs and lower lows, contained between two parallel downward sloping trend lines. That's the dominant structure, and until it breaks, that structure deserves respect. Current price is 65 cents. And here's what makes this moment significant. Price is sitting directly on the upper trendline resistance of that descending channel right now. This is the exact line that has capped every recovery attempt for 8 months. Every time MNT has approached this trend line, sellers have shown up and pushed it back down. We're at that line again today. The red support zone between 59 and 62 cents sits below current price and has been tested multiple times without breaking. Each time buyers have come in and defended it. That repeated defense is meaningful. It tells you there's genuine demand in that zone, not just a lack of sellers. Now here's the detail that stands out most to me. Volume is extremely low right now. Historically, when volume compresses to this degree inside a pattern, it precedes a significant move in either direction. The market is coiling. Something is about to give. Low volume alone doesn't tell you which way. But it does tell you the next move is likely to be sharp, the breakout scenario. If MNT closes above the descending trend line with a meaningful volume spike, the first resistance zone to watch is 70 to 75 cents. A clean break and hold there opens the path toward 85 cents, and beyond that, the $1 psychological level becomes the target. These aren't arbitrary numbers. They align with prior structure and Fibonacci levels from the broader downtrend, the breakdown scenario. If this trendline test fails, as it has multiple times before, price likely pulls back to retest the 59 to 62 cent support. If that zone finally breaks, the next meaningful level is around 48 cents. That would be a new low and a significant psychological blow to the bullish thesis. The chart is set up for a decision. It just hasn't made it yet. Here's where the Mantle story gets genuinely interesting. Because the fundamental developments over the past few weeks have been unusually active for a project in a downtrend. The most significant catalyst is the Bybit integration expansion. Mantle is growing its MNT spot trading pairs on Bybit from just 4 to over 20. And options trading is reportedly on the way. If you know your crypto history, This mirrors the early dynamics of BNB on Binance. Deep exchange integration creating consistent structural demand for the native token. That's not a small thing. Exchange native tokens with deep integration have a built-in demand driver that most projects don't have. On May 21st, MNT jumped 10% on RWA-related interest. Real-world asset tokenization is one of the hottest narratives in crypto right now, and any credible project touching that space gets attention. The $4 billion treasury gives Mantle real capacity to deploy into RWA infrastructure. Aave restored with borrowing on Mantle following the RSETH exploit crisis. This is worth noting because Aave's risk managers are conservative. The fact that they've restored lending operations signals restored confidence in the network's security posture, and MNT is now live on Solana via the Super Portal bridge, expanding the asset's cross-chain reach and making it accessible to an entirely different user base. Put it together, mainnet activity is growing. Exchange integration is deepening. Blue-chip DeFi protocols are re-engaging. And a $4 billion treasury provides strategic flexibility. The fundamentals are telling a different story than the price chart. And that divergence is either a setup or a trap, depending on what happens at this trend line. Now let's talk about the risks, because they're real and you need to know them. First, 8 months of downtrend requires real, sustained volume to reverse. A trendline touch without volume confirmation is not a breakout. It's happened before on this chart and failed. Don't confuse proximity to resistance with a confirmed break second. VC and early investor token unlocks are overhead pressure. There are wallets with significant unrealized gains from early rounds that are still selling into strength. Every rally provides an opportunity for that supply to hit the market. This is structural selling pressure that doesn't show up in the headlines. Third, Bitcoin correlation. If BTC decides to roll over and retest lower levels, MNT follows. It doesn't matter how good the fundamentals are in a risk-off environment. Correlated assets fall together. Mantle is not immune to macro. Know the risks, size accordingly. Here's how I'm framing the targets for the rest of 2026. 3 scenarios, conservative, 85 cents to $1. This assumes a trendline break with moderate follow-through, no major BTC headwinds, and gradual Bybit integration demand kicking in moderate, $1.20 to $1.50. This requires sustained volume, the RWA narrative gaining traction, and Mantle successfully positioning itself as a credible L2 for institutional DeFi bullish, $2 and above. This is the scenario where Bybit integration creates BNB-like structural demand. The treasury gets deployed into high-profile catalysts, and broader market conditions turn favorable, possible. But it needs everything to go right. These are not guarantees. They're scenarios based on current data. That's the full Mantle breakdown. The chart is at a critical decision point. The fundamentals are building quietly. The risks are real and not to be dismissed. Watch the trend line. Watch the volume. A confirmed break above 70 cents with volume is the signal. Without that confirmation, patience is the right trade. If this kind of analysis, honest, data-driven, no hype, is what you're looking for, subscribe and hit the bell. Like the video if it helped you think through this setup, and drop your MNT target in the comments. I read them all. And as always, this is not financial advice. Do your own research. Manage your risk. Never invest more than you can afford to lose completely. See you in the next one.